So there definitely is a ton of insane stuff happening to Clover Health investment stock again, especially with the just crazy earnings being released about 2 weeks ago, as well as the absolutely massive now almost 20% jumps just since the last video. And now even crossing the $9 mark today. This might be the start of another recovery from the huge support level we are currently at after pulling down from the astonishing 458% jumps we've seen just a few months ago. So what we are going to do today is give you an updated insight into what is happening to Clover Health stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, so let's start talking about the company. And there still are some crucial aspects that certainly need to be considered here, including of course the insane earnings as well as some key fundamentals and products from Clover itself, as well as some short squeeze data, which we'll also take a look at in a second. But quickly starting off with the recently released earnings report, despite actually talking about this way more in depth in the last videos, Clover Health was able to pull some incredible numbers this quarter, beginning for example with a tremendous $412 million of pure revenue, sitting on a year-over-year growth of more than 140%. But even if we just take the revenue of the last quarter, and we said this before, still being a super high one with about $200 million in revenue, we are now up 100% since then as well. And as there obviously was a ton of additional money left for the company to actually invest back into the business and continue that massive growth, Clover did just that, showing off for example in the now $107 million that they spent only for staff and general expenses. But even in regard to the actual main product of the company, the Clover Assistant, which we'll also talk about in a second, there were some incredible gains in almost every key metric noticeable. In fact, just the lives under Clover Assistant's management alone increased an insane 230% compared to the second quarter of last year, now being more than 95,000 in total. Furthermore, the Assistant on its own is now expected to generate an astonishing more than $1 billion in revenue over the full year of 2021. And as you probably know, this Clover Assistant actually is a highly trained artificial intelligence platform built pretty much just for one thing: hugely improve the treatment of the now even bigger customer group, targeting mostly Medicare-eligible patients, while simultaneously being able to massively reduce on a lot of work where some really expensive staff was required before. And as this normal staff also is very hard to scale, the Assistant definitely proves itself here as well. But in the case of Clover, there's another really big factor that sets it apart from many other competing companies: the recent spikes in price. And, as mentioned in the last video, it actually gapped up more than 450% recently on exceptionally high volume, making it one of the most talked about Medicare Advantage insurers of the entire market, with mentions on social media skyrocketing to some all-time highs. But it was retail traders in particular that have pumped up the stock on forums like Wall Street Bets, owing to the significant short squeeze potential it had before breaking out with short interest literally topping 43%. So thanks to this huge hype, we were able to see something similar to the large short squeezes that occurred in January, with the price gapping up significantly as shorts were forced to cover their positions, while making the stock go up even more. But it's exactly the mentioned short interest that makes Clover Health such a compelling investment right now again, especially after recent 64% pullbacks. And now being up almost 20% again. Since we last talked about the stock just a few days ago, some first increases are already taking place on the stock. And that's not even taking into account the company's new released extraordinary earnings for the second quarter, which showed considerable growth in practically every sector. And, when combined with Clover's ultra-high growth business model, some future growth is almost certain if the company can continue to meet or exceed expectations. Alright, if you liked this video and want to support our mission of providing free financial information here on YouTube, please ensure you're subscribed and definitely consider leaving a like. Thanks a lot, and see you next time.